All right, so I'm sure a lot of you guys are probably a little surprised with the price action that we're seeing today for Bitcoin. Uh, I really want to just jump into the weekly technical analysis for Bitcoin. This is going to be a very, very informative, quick video for Bitcoin. And I want to just show you how I'm looking at this price action from the weekly standpoint as we enter 2024. We know we have, from a fundamental perspective, we've got the halving coming up in March or so it's a couple months away. Typically, we do see an actual sell-off just before or like even during the halving, kind of like a buy the anticipation and then sell the news of when the halving actually takes place. So we do get a bit of that effect from my experience. I've gone through about 3 of these cycles now. Um, and so I'm kind of thinking that we should probably see a pullback just from the high level thought process. The second thing, we know that the economy is in trouble right now. People are starting to feel the pinch of the rate hikes, as everyone is sort of familiar with. But we know that the Fed is going to need some type of excuse to raise rates, or sorry, to lower the rates, okay? Because they jacked up the rates. It's not sustainable at these levels, and they know that eventually they're going to have to reverse course. Uh, you know, all things being considered, that inflation will come down. But essentially, when inflation comes down, that just essentially means that assets are selling off. Prices are dropping. That's deflation. And so that's really going to be the trigger for the central banks to actually do what they want to do now, which is drop rates to basically save their system from imploding on itself. So I'm thinking about that perspective as well, that we're going to need some kind of catalyst, a stock market drop, perhaps, housing market drop. Basically, all risk assets are going to probably see some type of drawdown in Q1 that will trigger the Fed's pivot in 2024 to start lowering rates. So with that in mind, I'm also kind of factoring that into we could potentially see some downside, uh, short-term downside. Let's put it that way. Maybe a 30% drawdown, maybe 15%, and you always have to be prepared for that in crypto. So now that you have the proper mindset and you're saying, okay, I know fundamentally, things can happen in Q1. We do have a macro event coming up, also in 2024 with the presidential election. So you're kind of trying to time, you're factoring all this into the timing of your position. All right. Now, that's when the technical analysis comes in, and you can kind of draw and forecast out what you expect to happen and how it kind of will align with your fundamentals. So what I want to do is that we're looking at Bitcoin on the weekly chart here on TradingView. You can come follow me on TradingView. Just a reminder, the link is in the description. You can just search for Lorenz Capital as well. Also, you can find me on Twitter, and you can pop over to my website as well, where I've got some exclusive content for you guys. But essentially, we're on TradingView. I like to do most of my analysis on here. So for this video, I'm keeping it very, very simple on the weekly chart, and we're going to zoom in a little bit actually into the daily and the 4 hour as well, just to get some kind of expectation for the next maybe week or two. But what I like about this weekly chart, guys, is if you take a Fibonacci, right, we know that we saw a full cycle. We saw a full top and bottom cycle, so we were able to start anchoring some technical indicators, uh, specifically with the Fibonacci, so that we can map this out. Now, what I want to do is, and this is the Fibonacci I'm referring to here. If you don't know how to draw these, essentially, you just come over here into the tools, you select this Fibonacci tool right here, the Fib retracement, okay? And then you just essentially go, okay, well, where is the top of the cycle and where is the bottom of the cycle? And then you anchor it there like that. So this will be the top right there, and just let it kind of click into place with the magnetic tool. And then boom, there's the bottom. Okay, so that's gonna tell me where the price action is probably going to get resistance. It's going to hit resistance at these fib levels, we call them, or I don't know, for the purpose of this video, they're just yellow lines, right? But essentially, the 0.5 means that's 50% of the retracement, meaning if it gets up to this level, it's actually rallied back 50% of this move, okay? And then obviously 78%, 61%, 38.2%, etc. So we did see throughout all of 2023, right? 2023 starts here and 2024 starts here. So this is all the data for 2023. It's just essentially a bull market. And you can see actually my publication here, guys, right at the end of 2023. There's a little publication here that I was essentially forecasting this exact move for 2023. You can check it out on TradingView, like I said, but essentially that kind of kicked off the bull market. Was essentially the beginning of the year. So we rallied, and I want to show you guys, because this is another thing I like to do, is I just like to see if there's any respect on these Fibonacci levels. So let's zoom in a little bit, and I just want to see, did we get some price action that could kind of validate that these levels are in play? And what I see, it's a little sloppy, right? I do like to see a little bit more precise kind of triggers on these levels, but sometimes you do get a little bit of a gap here. It's like front running and things like that don't essentially let the price actually hit the level, but just get close. But I do think that this is enough validation coming into this 38.2 and getting all of that support and then rallying up to the 50, right? And then hitting resistance back down to the 38.2. That's enough of a validation for me to say, hey, you know what? And then even if you look over here at this 23.6, that was the initial support after we got the pump, and we came down, support, up, right? And then some 38.2, right? 50, 38.2, 50, 38.2. So now I know that, okay, and based on what I've seen in past market cycles where I've done this exact analysis and it's helped me accumulate a good position with a pretty decent average price. Now you're looking at these levels and you have to be ready to buy and put in orders at these levels, okay? So right now, what I'm saying is the 50% retracement is $32,000. That is a fair price for Bitcoin at this point in the cycle, okay? Now, that is a really deep discount to what we're at right now, which is 42,000, okay? But it is still possible that we do get some kind of push down into 30K. That's possible. I'm not sure what the odds of that are, but it is a possibility. The second possibility is we push down to about 38,000. That is the 61.8 retracement, and that is a very, very highly watched level on the Fibonacci. I would say the 61.8 and the 38.2 are the two biggest levels to watch on the Fibonacci. They do get a lot of price action. And now the next thing I really want to do to kind of help me kind of reveal these levels, I want to know, are these levels actually trustworthy, right? Well, we have a little tool over here called the volume profile. Okay, so you can click this little tool here. You can kind of see the drop downs, and you can click on this anchored volume profile, and it will show you the volume from that level and what price that volume is being traded at. So when I go ahead and click the volume profile on there like that, you'll see the volume bars open up here on the right hand side. So what that tells me is now we can kind of zoom into these levels and see, do we see volume spikes on our Fibonacci levels as well? So I'm looking at that 38.2 and I want to see big volume bars in around here. So what I do see is it's a little bit higher, right around 28K. My 38.2 is around 26K. So a lot of volume in and around this 38.2, but it is a little sloppy. You can see a lot of price action below here. And you know what? I'm going to get rid of this cloud for a little bit because it's not really relevant for this video. But you do see that there is a big volume bar sticking out right at the 38.2. So that's what I like to see. Now we come up over here to the 61.8, okay? So now I'm looking over here and I see, okay, there is definitely the highest volume bar. Highest volume bar is right on our 61.8, right? This little bar right here, sticking out the highest. That shows that the 61.8 did get a lot of price action. You can actually see it in the price action here as well on the weekly chart. Okay, you can see 1, 2, 3, 4 weeks of just pressing up on that 61.8. Okay, so that tells me, okay, that is another big level. So potentially that is where you might also want to place some long orders if we do get a sell-off like this. So that right there, easily, guys, 15% correction could easily happen in Bitcoin at any given day. I mean, that could happen in one day, no problem. So just keep that in mind, and I want you to be prepared for the event that that does actually take place. So remember, those are the two buying opportunity levels that I really like. It's about 37,000, and if we do get even deeper to like maybe like a 25 or 30% correction, that gets us down to about 30K, and that is another great buying opportunity. I will also be looking for some kind of respect on this trend line. If I take a trend line from the very bottom and I just kind of touch it up on these bars here, you can see that if we extend it out, this should be a little bit helpful with expecting of timing. Now, it's rare that all this stuff does come together and perfectly align. But you can expect that perhaps we do get a big drop in maybe end of January and we do come down to 30K. Or we get more of a sort of gradual decline in the first 2-3 months of the year. And we see this kind of price action just kind of taper off, and then slowly retrace back down to the 61.8, where we'll get all of this volume support coming in as well. And then maybe we meet the trend line right around here in around Feb or March, and then that kicks us up back into new all-time highs. Point is, guys, don't get sidetracked with the daily fluctuations here. You have to keep the long-term vision alive, because we are in 2024. We're sticking to the plan. We know that we're going to be looking for exit opportunities in 2024 towards the end, and also mid 2025, hopefully. So when you have that kind of long-term perspective and you are able to zoom out on this weekly chart, you can really anticipate different scenarios playing out and prepare yourself mentally, because that is the key. That really is the key in this market, is to not make mistakes, right? And not let your emotions suck you in, because your emotions change on a day-to-day basis. So they're not very trustworthy, in my opinion. So that's why I look at this TA on the the longer term time frames, and it keeps me from having to do too much work and really get into the nitty-gritty, the weeds of the daily and the 4-hour chart that I'm going to mention here. But you do see this daily sort of engulfing. I'll put it on the candles here so you can see a little better. Let's see this red engulfing. Well, it does look like it's actually getting gobbled up a little bit here at these lows. But this is a pretty nice little sell-off. I think it is a sort of like a front run on this 78.6. The 47,000 level is so huge for resistance that I'm really cautionary buying anything up here on a sort of like a momentum play, even though we are this close to the halving. I think you're better off just kind of waiting for your level. Look at the 61.8, guys. When we initially pumped up here like that, look at this resistance off the 61.8 on the daily. We finally broke above it, and then we pumped, and I really think there's a lot of sell orders at that 47,000 level. If you look left, there's a whole bunch of resistance up here as well, right? Like from the past, you can see there's key levels up here. A lot of confluence for technical indicators as well, not just what we're looking at in this video, but we know that 47,000. Look at, there's no volume up there either yet, so it's very, I don't know, high level of resistance, I would just call it. And I do really think that a 61.8 retest is very, very likely. And then who knows, if it starts to look like a head and shoulders and gets a little bearish, we could come down to the 0.5, right, and come into 30K. So as long as you're prepared for that, I think you should be okay. Because keep in mind, I still do see, if you look back at the weekly, I still do see this 2024 bull market kind of kicking up and taking us past 100K probably by the end of the year. So all of this stuff is just going to look like noise. It's just going to look like fluctuations, manipulations, you know, liquidations, right? A lot of margin traders are trying to time this thing exactly right and they're going all in, right? And those guys, they get flushed out. So just remember the long-term vision, um, and kind of don't get caught in the minutia of the daily and the 4 hour chart. Sometimes just zoom out and stick to the playbook. All right. So that's going to be it for today's video. I do want to thank you guys if you made it all the way to the end. Thank you for tuning in. I appreciate the support. Again, come on over to the website. Come on over, check me out on social media. I'm trying to do daily updates. Uh, you know, pretty much across all the markets. I do favor Bitcoin and cryptocurrency, but I do apply some of these technicals to the stock market as well as the housing market in a couple of different areas as well. So definitely hop on over to the website. Give me a thumbs up if you appreciate it, and I'll see you in the next one.